What the hell is going on, guys? Welcome to another episode of Buy and Hold with your guy, Thick Teddy. I want to thank all of you guys for tuning into this video. I want to say drop a like on this video if it helps you out, subscribe to my channel, and also comment what you think of this video, and also maybe some tickers you want me to talk about in the future. Today we're talking about Coinbase, C-O-I-N. It's been a crazy last week for Coinbase, probably last 2 weeks for Coinbase, as you can see via this daily chart. We topped at $76 on October 22nd, and now we have touched $44. So we went from 78 all the way to $44, all within probably a 3-week span. So it's been crazy. And we need to talk about a little bit of the fundamental reasons why, some of the technical reasons and some technical things that we could be looking towards in the future, and if we should buy this and hold this, or if we should avoid it altogether. And also here's the top that we saw in August, which was $115. That's pretty crazy. 115 in August, which was 3 months ago, all the way down to $44 yesterday. So first off, let's start with technicals. I will give you guys kind of a technical outlook on this, and then we will get into fundamental stuff. You guys know the drill. I'm trying to give you guys a clear look at these stocks to let you guys decide for yourself if you want to buy and hold them. I'll give you my opinion, and then you can make your own opinion. So here we are. We are probably, touching this demand zone that we've seen from, when is this? This is May of 2022, June of 2022, and then June again of 2022. We're touching that demand zone. So we're bouncing in a very clear bounce zone, which is not the worst thing that we've seen. But look at this volume, guys. Look at this volume right here. Not good. Volume here, which was this red, indicated a very clean top. That you could have shorted very easily. This volume came from this immense downfall. And you can also see when Coinbase does break a demand zone, this is the sort of move that we see. We saw it move absolutely crazy to the downside in April and May of 2022. So let's be clear, if it breaks this downside, this demand zone to the downside, there could be very, very large implications for bears to make money and bulls to lose money. Or this could bounce out of this demand zone and we could be seeing a great move to the upside. But for that to happen, we're going to need fundamentals to line up with technicals. Technicals, it could be in for a bounce here. That's what we're seeing. But the other thing we have to keep in mind here as well is we do have a very, very clean $60, $61 resistance. And if it confirms below that, we are in grave danger technically. And I would not be, with all the things that are happening fundamentally that we're going to talk about later, I would not be surprised to see this thing break below this 61, or come back up to the 61, come back up to the $61 resistance and get rejected heavily back into this demand zone. The other thing we need to talk about for the technical wise is Bitcoin. We're going to talk about Bitcoin because Coinbase moves with Bitcoin pretty close to it. Bitcoin's down 5%. Then Coinbase is going to be down 5%. And Bitcoin, we have just broken below a massive support of 18.5K. And now it's coming up, maybe going to try for that retest, but this is not good. This is not good for crypto. It's for many reasons. The volume is so red on these Bitcoin moves. This feels like a very, very strong move to the downside. One that you do not want to be catching the knife on with a long via coin or a long via Bitcoin until this finds support. So what I'm saying is technicals are very mixed. So now we need to move into the fundamentals to determine, do they overweigh the technicals? Because, Coinbase could be bouncing in that demand zone, but it also could be coming up for a rejection and confirmation lower. We need to seek technicals to figure that out. Let's go. I want to actually look at this one first. This is their basic just overview of kind of their their financials. Their market cap is 10.8 billion and their sales are 5.8 billion. Not bad. That's pretty good. Sales are pretty high there. So one would think they would be making money then, correct? No. They do not make money. They are actually negative 172 million at the moment. And I'll also show you, let me go back to this trading view. I need to pull up Coin. We can look at their earnings. This last earnings recently, they lost $2.43 per share. Earnings before that, $5 per share. Earnings before that, $2 per share. So they're losing money per share. Never a good sign for something that you'd want to be investing in. Their PS ratio is very nice. It's under 2. They have a bad debt to equity ratio, meaning they have a bit too much debt for the equity that they hold. Basically is what that ratio means, and we don't like that. We're not really one to taking on debt heavy companies unless they're showing that they're gonna pay it off, and they're not showing that they're gonna pay it off. We need them to be making money if they're going to be paying off their debt. We can also see their EPS is minus 180%. We can also see that institutional transactions are down. Insider transactions are up 250%, but it's still only 0.2%. Not good. That's not good. 0.2%. We want to see more than that. Institutional transactions are down in the past 3 months. Operating margin we don't love. Profit margin we do not love. These numbers are not great. These numbers are I might say so myself, a bit bearish. And the reason that they're a bit bearish is it goes back to these earnings. You can look back here. They were positive. They were making money. They were making money. And then now they're not making money. And that is such a big switch to make. If you're a company that wants to hold value for investors and you want investors to see you as a valuable asset to their portfolio, you need to do the opposite. You need to go from not making money to making money. And Coinbase has already done that in their entire road, but they just became public recently. So we investors were not able to see that track record of them going from negative to positive, but now we're seeing the opposite, and it is terrible. It is terrible for investors to see. If you're invested in Coinbase, you hate to see them go from making money to losing money every quarter. 3 quarters in a row that they've lost money. Previously, they had 3 quarters in a row that they had made money. This is not a good development for Coinbase as a company. Let's see if there's anything else on this we need to talk about. Essentially, you just need to know that they're losing money. They have a bad debt to equity ratio. Their EPS is not very good. Institutions are dropping them a bit. Their margins are not as great as they could be and as they were in the past. Now let's talk about the big kind of elephant in the room for Coinbase. The fall of FTX. FTX just happened 3 days ago, and let's just read through this quickly. I think I discussed it on my podcast last night, but let's talk about it again. This is basically a thread for dummies because I'm not a crypto genius. I've never been really deep into crypto DD, but I want to give you guys an outlook on this. So here we go. FTX was a small startup compared to Binance. It had a steady growth. Binance was established already, so Binance buys shares in FTX just as Kenya Airways would buy shares in Tanzania Airways, both operating in the same area. Kind of like I said on the podcast last night, if Wish was not as shitty as Wish, but Amazon was buying shares into Wish. So like if Amazon was buying shares into JMIA or the Russian Amazon sort of thing, FTX soon outgrows other exchanges such as Coinbase, Paxful, CoinMama to become number 2 behind Binance. Anyone would be threatened by this. Binance was not immune. I'm kind of paraphrasing, guys, so just don't think my reading is terrible. I'm just paraphrasing this. FTX initiates transaction to pay off Binance earlier investment in them. To pay off Binance, FTX proposes to pay them in a token, and they do end up paying them in $2 billion worth of this token. That makes Binance a massive whale. So essentially, that would be like me having like half of the float or something crazy of a small penny stock or a fourth of the float. Like I could move it however I fucking wanted to. And then Binance announced that FTX was kind of crossing them and started a rumor about them. And so they're going to sell their coin. They sold their coin. The coin lost 16%. And then basically when it rains, it pours. And, drops came down and then the waterfall started and everyone sold. FTX could not support it and it got fucked. And how that happened, it's different than how Coinbase operates their platform, but it's not to say that something similar could not happen to Coinbase. And we're gonna open this up and read a little bit about Coinbase versus FTX. So a comparison between FTX and Coinbase is similar to an up-and-coming fighter facing an experienced vet. So Coinbase is one of the oldest. 40 million verified users. FTX is the young spirits. They offer more cryptocurrencies. So FTX offers 200, over 200, and Coinbase only offers support for 43. Let's see what else it has to say. Yeah, this seems like kind of like more of a, like if you're going to use one of the companies, but I'm not going to use them. But regardless, we see that they're in the same field. FTX is a bit newer. Coinbase is a bit older. And you know, people trust Coinbase due to that. But how far can you trust something that one of the biggest companies in that exact space has just completely gone under? Like FTX just completely went under. They completely lost everything, 100 to 0. And Coinbase is a very similar company. How can you trust that? I can't, you know, really get behind investing in something. That would be like if, you know, if Ford just went bankrupt and everyone was, you know, hot on GM. You'd feel really like, like why would I do that? Like why would I want, if Ford just went bankrupt, why would I want to be hot on GM? You know, it seems like, you know, the sector isn't doing well. And that's exactly what's happening here. The sector is not doing well. Coinbase is down a ton. Bitcoin is down a ton. FTX just went bankrupt. We saw the Luna depegging 6 months ago. It feels like a space that you cannot feel confident in. And it feels like a space that in a year and a half, 2 years, Coinbase could be a fucking penny stock for all I know. Like people could lose all, you know, stability and all interest in investing in crypto if one more of these happens. You know, if something bad happens one more time, they might already be there. They might already have lost all their interest in investing in crypto after these two massive failures. So I'm not feeling confident about Coinbase based on this. And then we can look at their earnings. So they have been losing monthly users. We're gonna go down and read a bit more about that. But they lost 2.43 per share. Their revenue also missed. But the big thing I want to talk about is down here. Where is it at? Here it is. So the company said it had 8.5 million monthly users, down from 9 million the prior period and 9.2 million the first quarter. That's 3 consecutive quarters of a decrease. One thing we can say is the definition of a recession is multiple quarters in a row. And, you know, the market had multiple quarters down. That's a recession. I feel like that confirmed it was a recession. And I feel like this is doing something similar. I mean, obviously Coinbase is not in a recession. It's not a market that has a recession. But it has 3 consecutive quarters of losing users, just like the market had 3 consecutive quarters of, you know, decreasing GDP. Coinbase here has had 3 consecutive quarters of something bad happening that is massive for them as a company. And I feel like that's worth noting. And I feel like it's worth kind of saying I'm not ready to tell you guys to buy and hold this. If this came down, you know, if they were to, you know, make margins a bit better and pay off some of that debt and be making money, then I'd be a bit more comfortable. But right now I'm feeling like this is all around a space with the crypto space that is not really investable, paired with one of their main competitors going completely down. It's making people scared. It's making people very scared. There's an argument that, they're going to gain more users because all the FTX people, or those people are just never going to come back because they're terrified and they saw what happened and they almost didn't get any money. They almost lost every single cent that they had. So it's very, very scary. I think there's a lot of fear about investing and using Coinbase and any of these platforms. I think Coinbase, you know, financially is not doing well. Their chart has a chance for confirming lower and heading down and breaking that demand and just waterfalling. They need to start making money again is a big one. They need to start getting that EPS to positive, but they're losing users every quarter. It's not good, guys. So I'm going to say this one is bearish for me. It is not a buy and hold. You know, maybe if it drops below 40, I would look towards it again and just kind of keep my eye on it. But I also want to see them move towards a better place financially than they are now. So it's going to be not a buy and hold for me, guys. I hope you guys enjoy this. I hope this helps you, keeps you out of bad investments and puts you in good investments. This is the 4th episode. We had Ford, Disney, Meta, and now we've had Coinbase. So like, comment, subscribe to the channel. Thank you all for watching, And please have a great weekend. And yeah, good luck.